Hey, what's up, everybody? Welcome to Cyber Starters presented by ACI Learning. If you're looking for a highly engaging and relevant discussion focused on cybersecurity entrepreneurship, covering topics from how to start a business to challenges that entrepreneurs encounter to strategies for effective problem solving, then you are in the right place. Over the next hour, we're going to be dropping knowledge bombs on gotchas, things that you just obviously wouldn't know your first time through. But if you've gone through it a couple times, your second iteration, third iteration, you would absolutely be like, I'm going to avoid that. But that first time through, scrape knees and skinned elbows. But today we're going to reveal all those to you. So if you have cybersecurity or entrepreneurship aspirations, whether it's either launching your own consulting firm, side hustle and stuff, or maybe even developing product, you're going to want to listen to what we got to say. I'm very excited today. We've got a special episode, a little bit different format than usual. I'm going to be joined by my good friend, Ryan Leirvik, CEO of Neuvik and cyber entrepreneur. He'll be joined by his guest,
Gerald Auger of Simply Cyber.
Yeah,
right there.
Exactly. So we had a slight cancellation last minute with our guest. We look forward to having her back on in season 2. But Ryan and I did not want to cancel the show because we both have an absolute ton of experience with those gotchas. And I know, Ryan, you've been in business a little bit longer than I have. And I'm experiencing gotchas all over the place. In fact, even today, I can't wait to share a story with the Simply Cyber community of a challenge, a gotcha that I am dealing with right now. Actually, 2 gotchas I'm currently dealing with that are absolutely you'd be like, never think about that in a million years. Because I feel like, Ryan, one of the main challenges people have is oh, I can do this. I can do this technical thing. I can do an enterprise risk assessment. I can write software, whatever it is. Why am I letting someone else pay me to do it and taking, a portion of my efforts when I could just do it by myself? And the thing that a lot of people don't realize is there's a lot of maintenance. There's a lot of infrastructure that needs to be established. I'm not even talking about getting sales. I'm just talking about managing and handling your business that a lot of people don't see. So let's get into the gotcha episode. If you have any questions, holler at us in chat. I see my friends, Matt McDaniel, Alpha Sierra, Brian Peak, and James Driscoll. There's to name a few. Good to see everybody in here. Ryan, what's some gotchas that we got going? And then I want to share a little secret that everybody after the mid-roll of a key takeaway everybody will be able to grab after the show ends. Go ahead.
Yeah, 100%. Well, welcome everybody. Glad to be here today. And thanks for hanging out with both of us.
Exactly.
This is going to be a good episode. So one of the big things, and we hear this a lot, is literally the fact that as a practitioner, 50% of your time actually goes to running the business. It's all the things you just mentioned, Jerry. It's all of the pieces, the taxes, the banking, the finance, the structure, the registration, the HR, and we forget about all these things. So I think the number one gotcha, if you don't think it through, right, is oh, wait a minute, where's my time actually going to wind up going, right? We've mentioned it a couple of times, but I think that's the first one. So thinking through what do you actually need for the business, right? And then, who's going to do it? Is it going to be you, or are you going to get somebody else to do it? You can hire somebody, you can do outsourcing, but I don't know. To me, that's the biggest one before we get into all the other, corporate structure ones, right?
Oh, for sure. For sure. I feel day one, 0-1, if you're going to start the business, one gotcha. Fortunately, this didn't get me, but I could see where it would be slippery for someone to easily fall to it, is going out and basically starting a new bank account for checking for your business and really separating those two things. Your personal and your financial. You got to get a business. Your personal and your business. You got to get a business credit card. You got to get a business checking account. A lot of people are hey, don't worry, I'll cover this lunch, and they're paid with their personal credit card, and then just do a distribution to themselves. And the bookkeeping gets really janky, and that's quite frankly how you can not intentionally commit fraud, but be committing fraud accidentally.
Yeah. Precisely. So one of the tricks there has always been exactly that: set up your own account, but also set up your own chart of accounts and bookkeeping, right? Because you're right. You jump in with these great intentions, but then all of a sudden you're like, wait a minute, hang on, what was that for? And now you're in trouble with either your true expenses for your company, right? Which impacts your profitability, of course, right? Because you got P&L. This is the loss side. You can push you down the loss side or overinflate your profit, right? But without an actual accounting system to account for that, and then a banking system to support it, it makes it cleaner. And that's a big gotcha, because like you say, you can get so far down the road that all of a sudden, you forget where you expensed what, or what true expenses exist, or overexpense personally and not account for it in the business. The next thing there's implications across the board.
Yeah, 100%. Another thing that, I guess, take it or leave it, is around your business name, right? Like, now, I don't think you need to put so much stock into this, but I do think people, should put some level of effort into what they're doing. For me, Ryan, and a lot of you Simply Cyber community members may not know this, but like, my official business, my legal business entity is not Simply Cyber. The Simply Cyber was a YouTube channel I started that evolved into all these opportunities in business. And so I officially, so this is a fun thing that I learned. I officially emailed myself as the CEO of my company to myself and said in writing that effective immediately, Simply Cyber is the marketing department of my business, and make that official. So like, something as stupid as that, you do that so you can clearly say that, like, oh, I'm not doing business as a separate business and running two businesses under one umbrella for, tax purposes and fraud, evasion and stuff like that. But when I created my business name, and you could tell us how you came up with Neuvik, but when I started my business name, I thought, okay, like, I live near the coast, I like InfoSec, and I want it to be kind of generic. So like, you're not. I feel like if you name your business like, I don't know, like, the Greater Atlanta, financial markets expert fund, or what I mean? Like, I feel like if you paint it so specific, then you kind of eliminate yourself from being able to like grow into other markets or be able to market effectively, because people are like, oh, I don't want to do business with you because like we're in California and you're like, Greater Toledo, whatever. It's like, you don't sound like you matter. I don't know. What do you think about naming a business?
Naming a business matters, but I want to know if you responded to yourself in that email. When you sent yourself the email saying this is it, did you respond? I don't know. We need to negotiate this.
Yeah, we need to talk about this. No,
Right.
I think I just replied approved.
That's right. Yeah, sounds great. Check. Yeah. No, this is branding, right? What you're talking about right now is just the brand. And there's two major things that always matter there. One, is it unique? Like, is it unique to you? Because this gets into your business structure. Like, are you going to expand, right? Statewide, US wide, globally, right? Into different parts of the world, potentially, right? And can you own that name and operate in those others? Or are you looking to sort of, what's your exit? Like, are you looking to just build sort of a piece that fits into another? Well, this is what your brand stands for, right? At a certain point. And if you pick a name that already exists, like, one, you're gonna have a tough time. You might have some conflict down the road. If you pick one that is unique, well, then it's up to you to define what that looks like in the market. And that's, so I think when it comes to the name, right, it's really important to sit through and get in the mindset right away of like, where could this go and what do we want to name it? And then which people are getting really good at. I'm seeing some really cool names out there, right? They've evolved over the years, but the neat thing is like they all uniquely stack on each other. And then of course, like that particular name can be used somewhere else. And then you can, then you get into brand protection and things like that once you're going forward.
Yeah, but one thing I would love to share with everybody who's in chat listening, and Lawi committee over on LinkedIn, we'll answer your question in just a minute here. But one thing I want people to know is that you shouldn't let perfection get in the way of progress. I see a lot of people who are like, oh, like, I want to get the branding just like, you haven't even opened your doors. Like, oh, I want to get the branding just right. Ooh, I got to come up with a cool tagline. Ooh, I got to get a cool logo. And, by the time you get everything perfect, opportunities passed you by, or the market has shifted, or you're out of money and you can't justify now working on building a business. So, and to give my own personal stories here, like, obviously my business is named something else, not Simply Cyber. Then I started going with Simply Cyber. That's kind of like what is more known. I had a kind of logo that I made myself on Canva. Then I paid someone on Fiverr to build this Simply Cyber logo, which you can also see in the corner over there. And this has been the brand and the naming and the logo, and I've loved it for a while. But now I'm actually going through a branding exercise with an actual professional who, is taking my inputs and my inspiration and what I want to do and coming up with a more cohesive brand. Because Simply Cyber is cool, but like I have Simply Cyber Media Group, Simply Cyber Academy, Simply Cyber Con, the conference. There's a whole bunch of different things, and this individual is going to be able to cohesively brand everything together. So when you see something on social media or at a conference, you'll know immediately that it's tied to Simply Cyber because of that cohesion and similar fonts and watermarks and stuff like that. So it's been an evolution for me, but I just want to let people know, like, you don't have to get it right to still be successful, because you can pivot as you go forward. Big brands do it all the time. Like, let's not forget Coke invented New Coke, and that blew up in their face, right? And they were able to recover from that.
Yeah, or even the Chevy Nova when they launched in was it Mexico, right? And those who speak Spanish, like Nova means no go.
Yeah,
You launch a car that says no go. Like, you can get the brand really wrong before you even start. But there's this great scene in, what was it, The Social Network, when Jesse Eisenberg and JT are sitting down with each other. Like, he just got introduced to, Justin Timberlake and as playing the role he's playing, and he says, "Look," he goes, he added that one piece of like drop the and just make it Facebook, because like you don't know what it is yet. And granted, we know the story there, right? And that's not the point. But the point is, like, you don't have to get it right away. You just have to make a clean, easy, simple name that will become something that you can stand behind. And that's where your brand is. It's absolutely an evolution. And you don't know what it's going to be yet, because you don't know what twists and turns you're going to see. But the key is to sort of think through that right off the bat, right? And don't pick a easy one that, might offend people. You can kind of think it through and be like, all right, where might this land? And you kind of create a pathway there. Because if you get it wrong, it can stop the business a lot faster than a good brand can elevate what you're trying to accomplish.
Yeah. And just the final thing I'll say on this is, like, people aren't going to decide. They might remember you because of your branding, but they're like, if you are delivering, you could have the coolest branding in the world, and if you deliver a suck product, whether it's suck service or suck product, no one's going to care. Like, they're going to be like, oh, that's a cool, I remember how cool they looked, but their product sucked. Right. So, I mean, I personally have been told, like, oh, it doesn't really matter what you make the logo look like, Jerry. Like, people show up because of you, because of the community, because of the content, because of the impact. So I feel like just a key takeaway for everyone is you should really focus on delivery, and the branding is important. Do the exercises and come to your findings, but don't let it overwhelm you, because I feel like a lot of people get so excited. Like, okay, ready? Here's a truth. Okay, I feel like everybody I know, including myself, who starts a business gets business cards within like the first week. They're like, oh, I gotta get those business cards. Like, look, I'm official now. And like, then you just sit on them because you don't have anywhere to go with these business cards. Did you get business cards when you first got going?
Actually, we waited for exactly that reason, because it's like, wait, do we have the right logo? Do we have the the right numbers? Is our email address and our pieces put together? Because that all matters. Once you put it out there, like, again, this is part of the sort of getting the mindset of creating the business. You've got your brand, you got how you're going to communicate to everybody, and then you got your your business card. I mean, good news is not a lot of people have business cards as much anymore, but we got one later once we thought through, all right, this is the phone number that we're going to register, right? And this should be around for 2 years. So if somebody winds up calling us, they're not going to drop. Like, this is our top level domain. That's obvious. Like, we can route those these days, or at least the URL side of it pretty easily. But the big question then becomes like, all right, great. Like, when you hand out your card, and somebody picks it up in 3 months or finds it in a drawer somewhere, can they still contact you? Right?
Yeah, that's true. You got to keep that. Got to keep that going as well.
There's a lot of forward thinking that, like, I can't encourage this enough. Like, it's hard. You'll never think of everything, right? You just won't. But if you think through enough things, right, you solve those problems early on, right? And you're not so quick to just hurry up and start a business. it has this effect of just reducing stresses later on. Like
Mhm.
I just had a conversation with a bunch of lawyers. Yeah, believe it or not, because business structure matters.
That sounds fun.
Yeah. Well, we're pushing into another part of the world, and so there's a lot of legal structures that we're trying to hurdle. And it was really interesting because after we got through everything, we sat down and we had a couple beers, and we're like, all right, great. What did we not think about?
Mhm.
Right. And because we're already in the mindset, we're already thinking about it, and not to encourage alcohol, but so take it or leave it. But this was helpful to think through, like, what did we miss? And we came up with 3 or 4 things. It was like, okay, yeah, we need to consider that as part of our legal structure and part of our entity and a part of our legal liability reduction. Because like 6 months from now, if that shows up and we didn't think about it now, oh man, we'd be in a lot of trouble. So yeah, the more you can sort of think through things in the beginning and have some fun with it, right?
Mhm.
Then I think it pays dividends later on.
Absolutely. I want to let everyone know, I'm going to share this right now. Ryan and I actually sat down and worked through what all the things that we could think of at the moment, and we documented it in a swipe sheet. I'm going to make this available to everybody right now. So I'll drop a link to it in chat periodically, but go ahead and grab that swipe sheet if you would like to. It's a free download. It's not a lead magnet or anything like that. It literally will just take you directly to the document. You do what you want. There's no auditing. There's no pixels, Facebook pixels in there. Just go ahead, grab it if you're interested in starting a cyber business or learning about some of the things that you should be thinking about. So let's talk about operating structure, Ryan. Why should we care about operating structure, and what does that mean?
Yeah, to me, this first starts with just the way you structure the business, itself, just the business structure first, right? So you have, again, this starts with what do you want to do at the end, right? Do you need founder shares that you want to protect for tax reasons, right? That might push you into, whatever structure and an S corp, right? Do you want the corporate overhead so you're actually going to build and land and expand in your country and then in others? Well, then an incorporation would matter. And how you begin the overarching structure then influences the actual operating structure of the company. They don't have to be, they can be mutually exclusive. But in order to support what you're trying to achieve and the way you formally structure the business for tax reasons and country reasons, right, then helps put the structure in place. And I think one of the key gotchas to avoid is it goes back to the time element, right? It's like, who is going to be doing what in your organization and what responsibilities do people have, right? Because we all know the pitfall of jumping in and trying to solve a lot of problems at the same time without any prioritization. We all go through that. But the bigger challenge is if you're clear up front with what individual or role has what responsibilities and what's the overall expectation, and structure it that way. Now you can look at it and say, oh, we actually need like a marketing officer to do these particular things because the people we're going to ask for sales are going to need that to go, and we don't expect sales to do it, right? So in our sales department, right, our sales individuals, we want to incentivize them to continue to fill the pipeline or sell the product or sell the service. So we don't want them busy, creating marketing materials, but they can feed it to the marketing team. And if you think through those pieces, you start to get things fleshed out in terms of, sort of the tip of the spear from the communication side, which is marketing and sales. And the same goes for the back end structure, right? Like, who's going to do your taxes? Who's going to do your legal side? Do you have an in-house lawyer? Probably not in the beginning, right? Very few people. I won't go there, but very few people do, and very few people may or may not. You want to consider that, right? But who do you outsource to? Can you trust them, and can they scale the way you want? And now the rest is the rest of the sandwich in between those two, right? It's who's how are you making decisions in the company, right? Do you have a chief, sort of a CEO, and he or she's sitting in that spot to actually make the final decisions? Or are you more collaborative? You're a partnership model where people are taking different sides. Like, these are the things that matter. And then of course your operations and piece fall into it. So there's a lot of good resources out there for these things, but it's worth thinking through because the business sort of operating structure, and Jerry, I'm interested in your thoughts here in a second, like the business operating structure becomes the scaffolding in which your company's going to grow. right? And if you think about it like scaffolding, that means you can hire really good people to come in and take parts of the pieces that the scaffolding is already there, right? And grow that, and the structure is already there versus trying to bolt on things later. I don't know, Jerry, have you had that experience at all?
So I do not, but what's interesting, and this is a real special, just happens to be serendipity. Ryan is the founder and CEO of a cyber startup that has faculty, that has staff and employees, and a bigger, different type of business. I only have me for all intents and purposes. My family is involved with the business, but so when we talk about organizational structure, it's much more important for Ryan because you have other cooks in the kitchen, if you will, other players, other factors, other voices. Again, I'm self-funded and I am, kind of, operating over here now. So operating a business structure doesn't matter as much. However, what I would say is for tax reasons and for legal reasons and for liability reasons, for me, being a LLC, like a S Corp LLC, is the right way to do it for all those different reasons. So I feel like it's really important to differentiate. There isn't like one path for, hey, cyber startup, go do this. It really depends on what kind of business your business looks like. So, yeah. But I agree with in the fact of having scaffolding. So that's why I sent myself an email from the marketing to the CEO, even though it's all me. By the way, it seems ridiculous. Another thing that I'll just share with everybody that's kind of silly. So one of the things, if you're going to be a legitimate business and you're going to have to demonstrate evidence that you're a legitimate business and not some jackwagon who's just moving money in a shell game to hide from the tax man, one of the things you have to do is hold annual meetings. You have to hold annual business meetings. I have a special notebook just for annual meetings. And every year, I did it 2 weeks ago or 3 weeks ago in that chair right there. I sat down and I feel ridiculous doing it, but I'm like, all right, I'm calling this meeting to order. Like, are we all here? And I'm like, I'm here. And I documented attendance. I was the secretary. I was also the chair. And then I went through, and then I literally did do an exercise of, did I accomplish 2023 goals? What are my goals for 2024? What worked, what didn't work? I literally hold a, executive meeting with myself. So even though it's a single person entity, I do feel like you have to execute it with a executive structure, for lack of a better term, in order to realize the things. That way you can plug and play later on if you do need to add additional resources. Also, having said that, I do outsource a lot of stuff. So like, I don't do my finances. I don't do my taxes. I don't do my legal stuff. Like I have a lawyer, right? So like, I do have like chief counsel and chief financial officer and chief accounting officer, but it's just different, right?
Yeah, you need a gavel for your meetings. So
yes, I do.
You can hand them around.
Exactly. I need like the rubber one that like children have, like the
with the sound effects. That's the best. Yeah, because that's what makes it official.
It really does. And just really quick, Ryan, I want you to continue after this, but just to make everybody aware, a resource that we've got here is this swipe sheet that documents all the getting started stuff. I've got a link in chat right now. And it's free to download. There's no tracking. There's no give us your email, no nothing. This is literally this show, and Ryan and I's vision for this is literally just to help others not make the same mistakes that we made or move faster into getting their business off the ground.
Yeah.
Ryan, please.
No, there's a lot of issues there. But what I love about what you mentioned, and I want to sort of pull this out a little bit, which the viewers are used to, is the artifacts. Right? Because what's interesting, you don't know where you're going. So when you're going to structure it, like just having those artifacts in place are so helpful later on when you move into other states, sometimes in the US, or you move into other countries, or whatever the case is. Just having those artifacts are helpful, even if it is like, hey, here are the meeting minutes, by myself, from 8 months ago. If somebody asks for it, you can create it, and it's a little bit more authentic, which is interesting because what's flashing back in my head is like, yeah, documenting code, or if you're on the management side, writing policies, and like no one does that, right? But right, it's just one of the harder things, but it is so helpful to do, especially when you're in the mindset of it. It's just document, or at least creating a structure for it, or something that you can rely back to know what the thinking was and where it was. Because what happens later, especially if you go to sell, right? Or even move into another country. Like, again, you don't know where the future is going to hold. Maybe you do, right? There's a number of people that say, yep, I'm going to execute XYZ in like 2 years. Fine, whatever that looks like. But the key is you can tell the story over time, and you have documented artifacts over time. They don't have to be super, I mean, ideally they're tight, but they get judged at the end. You can tighten them up later. But the issue is at least have them in place so that, somebody could, ideally, like if somebody's coming to purchase you, they can see, yep, okay, they've documented things. We know where things are. And it gives them a level of confidence that, you're paying attention to things as you go. And it just makes it a lot easier. So you're not scrambling to put things at the end. So, documentation actually does help.
Yeah. I mean, I've heard it. I mean, again, if your goal is to sell, which a lot of businesses, that is the goal. I mean, I've seen business deals fall through because, you lift the hood and it's just a hot mess. And the acquirer's like, oh, Jesus, like if this is what I'm seeing just on the first day, like this is probably held together with bubble gum and
chewing tape.
Yes. Yes. It's all held together with a bunch of, puff. So, anyways, walk away from it. So for sure.
But to that point, this is so important because look, all right, let's talk about it. Here's a pitfall to avoid, right? When you're getting started, that is probably the biggest gotcha because it costs you money. Pitfall to avoid is not having these things, or to pull in what Jerry was saying earlier, like not having a separated bookkeeping, right? With a proper, with a proper credit, right? And debit, right? And cash flow, right? So you can actually demonstrate the profit and loss of the company. Because here's the dirty little secret, right? When you go to sell, this is precisely where they look for the holes. Well, in a number of different areas, right? But I mean, there's the market addressability and other things. But internally, if you don't have those things, right, you're only devaluing your company from the get-go. So it's one of those things that, like, if you can do it up front and just set the structure up front and be disciplined about it and demonstrate, you have good books and you've actually done appropriate P&L and you've got a good CPA or a tax advisor that can help you with these things. Now you have less of a reason, right, for the company to be devalued from a book value standpoint than you would if, as Jerry says, held it together with bubble tape and something else. Chewing tape. Yeah.
So we got a couple of questions in chat. Actually, let's keep talking, and all the questions in chat we'll do after the mid roll from ACI Learning. But I'm flagging all those. So let's talk about this for a second. We talked about documentation. I have a journal that I use officially for my annual meeting minutes. But I mean, also you've got to send email, you've got to collaborate, you've got to Zoom, if you will. So you do have to make an investment. Fortunately, software as a service has made it quite easy and quite affordable to scale up quickly with kind of core infrastructure applications. Ryan, what kind of, email is like an obvious one, but what are some other like core infrastructure that people should be thinking about that they may not be thinking about, frankly, because it's not obvious?
Yeah, good one. I think just your IT infrastructure really matters, right? Like, look, if you're going to get started in a cyber business, you got to eat your own dog food. Mm-hmm. You have to have document control, right? You have to have information control. You have to have all of the things that you would expect your customer, you're either bringing to your customers or you would expect your customers to have, right? So that means, having a dedicated infrastructure that is just for the business, right? That has the controls that you would expect. I mean, I'll leave it at that because that's a whole conversation in and of itself, but be disciplined about it, largely because this gets back to the business structure, right? You're going to have employment contracts. You're going to have sales contracts. You're going to have money flow contracts. Like, your critical items very quickly become, if you hire people, they're PII. And then all of a sudden, if you're giving benefits, then now you're dealing with HIPAA. Right. Mm-hmm. If you're on the sales side of it and you're dealing with credit cards, right, PCI is going to matter, right? And where you structure that and what, we have an international audience, right? Like, so what countries you're actually collecting this data and holding this data and processing this data in matters. And we, For those not familiar with GDPR, like read it, right? For those not familiar with PCI compliance in the US, get to know it. For those in the medical, that may be selling to medical companies or product organizations or services organizations, right? If you start dealing with patient data, that's a whole different ballgame. So start to understand what's critical, and your IT infrastructure around that needs to consider the security around it, right? Even at the earliest levels, even if you're a one-person sole proprietor LLC, like these are things that are going to matter, right? But hopefully, like we're in the cyber business, hopefully these are things that we would otherwise consider table stakes, that we see small businesses not do those things early and later on have to help solve them, right? So we would think that a cyber community would think about those things, but sometimes we take it for granted and we don't. So I would start considering what's critical and have that part of your infrastructure like right away.
Absolutely. And after the break, I'll come back and give you what I think a couple core infrastructure pieces are that people aren't thinking about. And then we'll get to the questions in chat. We'll see you guys after the roll here.
You chose a career in cybersecurity, and you follow this podcast because you're passionate about being at the top of your field. But let's face it, not all training is created equal. Don't settle for boring training that leaves you uninspired. You deserve the best to support your dreams. At ACI Learning, our instructors are legends in the field. Our studios are state-of-the-art. We're always on so that you can be too. We're equipped to pivot and cover every emerging trend in cybersecurity. Because in this fast-paced industry, you need training that keeps up. But it's not just about the expertise. Our on-demand video training is designed to be actually fun to watch. We believe learning should be exciting, not a chore. We offer training in every major vendor and certification. ACI Learning is on it, so you can be too. And don't just take our word for it. See what others are saying on Trustpilot. Real reviews from real professionals who have experienced our offerings firsthand. Choose ACI Learning because support for your cybersecurity career deserves nothing but the best.
All right, welcome back to Cyber Starters. This is the Gotcha episode. Ryan Leirvik and I, cyber entrepreneurs, we're dropping knowledge bombs about things that you may not think about that would be like a gotcha. The reason that this show came to be is because Ryan and I were talking about a concept that we could do, just the two of us, for a show. And I said, if I was to start another business, there's so many mistakes I wouldn't make. I would move faster and I would move cleaner because of just the mistakes and the lessons learned. I've been up and down the hill. I know where the rocks are. I know where the roots are. I'm still going to trip over some of them, of course, but it'll be a smoother experience. So that's why this episode came from. Right before the commercial, we were talking about back-end office tools. One that I'd really like to share with people, you do not need this day one, but I will tell you, I think it is a game changer early on, is like an accounting software. And specifically, I'm going to call QuickBooks out. I did several different, bake-offs, if you will, because I knew whatever kind of accounting software I chose, I was going to end up being baked into it and vendor locked into it, and I wanted it to be good. So I experimented with a few. I ultimately ended up on QuickBooks, not the best option, but the one that I went with. And I got to tell you, having a tool like QuickBooks or other tools, it allows you to do several things right off the rip that A, makes you look more professional, and B, more importantly, keeps your stuff in order. So when you invoice a client, if you write it on like a napkin or an 8.5 by 11, notebook composition paper, it just looks bush league. It looks like you're not in business. It looks like you're, just helping them out or something like that. Or you just saying, hey, why don't you just Venmo me $500 under the table? When you start building your business up and you're getting like $10,000, $20,000, $40,000 engagements, you can't Venmo that. You can't, you can accept PayPal, but now you're starting to get into territories of you really need good bookkeeping. So by using something like a QuickBooks or like one of these softwares, two things happen. One, you have a nice clean record of who you did business with, when you did business, what were the amounts, what was the product, all these things. And more importantly for me, again, I'm a solopreneur, so I'm wearing all the hats. Sometimes, and this happened early on before I got QuickBooks, like I would do work with someone, like say I do work with Ryan, and it would be like a month, and I'd be like, did Ryan pay me? It was only $1,500, but like, did he even pay me? And then I can't email Ryan and be like, did you pay me? Because I look like an idiot. So I'm like spending hours scrubbing through emails, going into the bank account, looking, maybe I find it, maybe I don't. Wicked frustrating. And with something like QuickBooks, one, it's all there. Two, you can just fire off, like send a reminder because it didn't come in. Obviously, there's way more functionality in QuickBooks that I don't take advantage of. But just for me, day one, being able to invoice and being able to send quotes out that look coherent, that allow you to track, it goes a long way, not just for professionalism, but for managing your own order and making it faster, frankly. Because I don't have time to mess around with, did I send an invoice? Did I get paid? All this other stuff. I need to be working on other things. Ryan, what are your thoughts around that? Do you get it day one? Do you get it day two? Do you do it after your first client?
Yeah, day one. In fact, way before day one. This is one of those things that, Jerry, you're spot on. Take some, notice the theme. It all takes some thinking. But what happens here is, like, it depends on who your clients are going to be too. So in the U.S., if you're going to contract with the United States government, right, you have to be compliant with some specific rules. We won't mention them all here, but depending on what country you're in and where you're working, your books are the things that get audited probably the least, but make the most impact later, both in the beginning and at the end. So think through the sort of accounting mechanism you're going to use, right? I mean, you want to be super secure, fine, go back to an actual logbook and log them all in. Nobody does that these days. But you do want to be compliant with exactly the pieces that Jerry's saying. It's like, you have to be able to track the items, what's coming and what's going. Because at the end of the day, when you invoice and when you have receivables, the delta between those two and your cost is called cash flow. And it's very hard to, if you get cash flow wrong, you can go under pretty quickly, or be flipped in the wrong direction. What I mean by that is, you have a certain amount of invoices that are out there that aren't being paid. That's your accounts receivable, right? And then you have your payments. Either you have people, or you have payroll, or you have other costs, right? And those go out on a certain cadence. If those two aren't in line or in sync, yeah, you could have a extremely high, I was going to say like $1 million, accounts receivable. But if it doesn't show up for 9 months and you've got $800,000 worth of cost up until that point, well, then your cash flow is going to be in rough shape. And this is where having a solid accounting system behind you that's compliant with whatever businesses you're using, right, or serving, right, is going to be extremely helpful, because you're going to need to keep an eye on cash flow. And this is one of the easiest parts. Now, I left out the banking piece. That's really where the cash sits. But your accounting software should be able to tell to the minute how much money you have in the actual bank. So yeah, very important.
Yeah, and speaking about money, so for those on LinkedIn, like Deidre, Michelle Thomas, who just asked, I've been dropping the sheet in YouTube chat. So Deidre, I just jumped on LinkedIn and dropped it in the chat there. So hopefully you and the other LinkedIn community members are able to pick that up. Another, I guess, sticking with the money theme, but another thing I, again, would love your thoughts on. I'm going to move myself over on this one, Ryan, and go off on a tangent for a hot minute. So allow me to do this. So one thing for me personally, and for those who are regular Simply Cyber community members, you know me and my personality. I'm very transparent. I'm very, what you see is what you get. And when I do transactions, if I make a deal with you, I'm going to hold up my end of the bargain. I'm going to do it to the best of my ability. It's going to be high quality. I have high integrity in myself. Okay. Professional integrity. So a lot of times I will invoice after services are rendered. And in my mind, business world, it's 30 days, net 30 terms, meaning I invoice you today and you pay me within 30 days. And I do that to look professional or look like a real business. Well, here's the thing. That works fine, but I have more than one client that has outstanding invoices that I'm pretty sure I'll never get paid, right? So when we're talking about profit, revenue, income, cash flow, expenses versus money coming into the business. One thing that I would caution you about, or put it in your contract that you're going to charge in advance, and then if something comes up, you have the integrity to refund those people, is maybe consider net negative 15 terms. Like, I put in your contract, I will sell you this and you will pay me before services are rendered. Now, that's easier to say for a services business or a like for a product, SaaS product, I mean, obviously you sign up and you start paying immediately, but just, I don't want anyone else to get burned where I have, over 10 grand in outstanding invoices that I'm certain I'm not getting replies back from those businesses any longer about, hey, where's my money? And I feel like I have no recourse for that, honestly, Ryan. And I don't want anyone else to deal with that. So, Ryan, how do you deal with, I guess, reluctant pay? I don't want to call them degenerates, but like, how do you deal with people who don't pay their invoices?
Yeah, this is where contracts matter, right? There's a handful of different things in the contract that you're creating with the person on the other side of the contract, right? And the things that really matter are, what are the services that you're going to be selling, or product or services, right? The second piece is, what's the compensation for it, right? What are you charging? And that those are the sort of the basic fundamental pieces of the contract. And the third piece is like, okay, well, when does payment get made, right? So everything else, legal liability, all the pieces, indemnification, all that piece, like, we're not going to address those here, but the three core things from a services standpoint or from a product standpoint are those three. And that's really what you're doing, is just creating a contract that could be used in a legal course of action should the agreement go awry. And it's all going to fall back on those three. Well, what did you promise? Well, we promised this. Here's what's in the contract. Great. Well, when did you promise to compensate the person for it? Well, here's where it is. Okay, great. And when did you when did you expect to compensate the person for it? Right. Those are the terms. And so it could be at contract signing, at net 30 days, net 50, net 100, this is what matters. So hopefully those are lined up beforehand and very clear, so that when somebody on either side of that contract doesn't meet the needs of the contract, you have either one, professional recourse to go and say, hey, look, these are the terms we subscribe to, let's solve this quickly. And if worst case, right, then you take legal action. Hopefully avoid legal action, because we all know that costs money, right? So there's this magical delta between like, well, how much is it going to cost me to get X? So that's a tricky situation, Jerry. It always is. And if you can iron those out up front and quickly, that can help avoid the problem later on, right? I mean,
yeah,
that's one way to do it.
And I would also just to put a quick follow-up to that, you should spell out in your contract what state's jurisdiction any legal recourse would take place in, right? Because a lot of times, like, I live in one state, they live in another state, and the contract gets executed, but it says all disagreements will be done in the state of California. And like now not only do you have costs for legal remedy, but you have to, like, you're trying to get paid and you have to fly to California if you don't live in California. You know what I mean? So like, you got to be careful with that too. So anyways, I just don't want anyone else to get screwed. I feel like that's a really deep skinned knee. That's like, ooh, that might need stitches kind of skin knee. So
yeah, but it's important, right? So I think that's called governing law, like the state of governing law, right? So and that matters, right? You'll see this with big organizations actually push for their state, right? Because their lawyers understand the state laws, or their country, because they understand the country laws. And that's where it's going to be arbitrated, right? And that's what matters. But there's all these like other pieces that you want to make sure in a contract, right? I mean, there's literally there's the warranties, there's who's going to do what from a public standpoint, there's the data you're going to use, there's limited liability, there's all liability, there's ownership. So the key pieces in your contract with that you're offering the service or product with, yes, the terms matter, terms and conditions really matter, but first you're going to be focused on what's the service, how much do I get paid, and when. But then underneath that, it's what happens if it breaks. And there's, you could have 17, 18, 25 different terms and conditions, maybe even up to 50, depending on what you're selling. And that's what matters. Because what you want to do is just protect yourself from a liability standpoint, so that you can either collect if you need, or you're not holding the bag if something goes wrong, right?
absolutely.
Yeah.
So If you're just joining us, you're watching Cyber Starters with Ryan Leirvik, CEO over at Neuvik, and I'm Gerald Auger. We are talking about gotchas. Basically, we both have started businesses, and there's a lot of lessons learned that you can glean from that. We have documented them all in this swipe sheet that I keep dropping links to in chat. So if you want to steal this, it's just a straight up Google Doc. The link will take you directly to the Google Doc, and you can go ahead and download it, PDF it, copy it, whatever you want to do. File it away. If you have even like the slightest inkling of wanting to start a business, you'll be happy that you did this ahead of time. Now, talking about money, I want to get into the questions from the audience. I told chat that we would answer their questions. So if you've got any questions, holla at us in chat. But Robert Wiley, since we're speaking about money, Robert Wiley wants to know, what's the biggest tax deduction for the least amount of investment? Investment, I don't know if that means time investment or financial investment. But Ryan, we're not lawyers, we're not CPAs. So as a qualifier for that, I personally, I guess what I'll say is I'm aware of several tax deductions that businesses can take advantage of. I'm a little reluctant to kind of get into the particulars on my specific business, but what I can tell you is there's a lot of like really great ones right off the rip. So you got your cell phone, your internet, obviously right off the rip. You can lease your car to your business. So like the private citizen, Jerry Auger, can lease my truck. I can lease my truck to my business as a lease vehicle. You can lease your office space. And those are the big ones that I know about. And then obviously, travel, lodging, and meetings. You can have meetings. You get 14 meetings a year under tax code. Again, not a CPA lawyer, that you can rent out a space for, and that's a tax deduction. Ryan, any thoughts around tax deductions?
Yeah, get a CPA early, have that conversation right off the bat.
Yeah, you know what? That's probably, I just gave a bunch of examples, but Ryan's right. Like if you're going to do this correctly, legally, above board with all the appropriate documentation, you absolutely should get basically a certified professional who can tell you those things and keep you in line. Also, if you are going to start getting into the business of tax deductions and these type of things and filing your corporate taxes, right? Those are different than your personal taxes. Having that CPA not only is important to identify those tax deductions, but also how do you document them and how do you file them? So at that point, I would say, Robert Wiley, you definitely want to be doing your taxes through a business accountant. Yeah.
Yeah. And Robert, I would also add your location matters, right? So in the States, we have state, local, and federal taxes, right? All of them have different tax structures, largely to create incentives or disincentives for certain businesses to do work, right? And so, we know this with the personal side as well. So I would say where you start your business is extremely important from both a legal contract side, because I think, Robert, you also brought up the legal risk, or actually might have been somebody else had brought up the legal risk, like both legal risk and tax account. We can get to that in a second.
Yeah.
But that's a big one. Yeah, perfect. You're going right there. Awesome. But
thanks for the segue, Tyler.
Perfect, Tyler. But the big key here is from the tax standpoint, just meet with a certified person, a tax advisor, and maybe look at one or two places to start your business, because there can be, to really truly answer your question, what's the biggest investment for the biggest payoff from a deduction standpoint? Time. Spend the time to find out where you actually should start the business, and it could save you up, a significant amount of taxes depending on where you start your business, just simply by a different tax rate in a different location. So that's the way I might look at it.
Yeah. And literally, there's a reason why most major companies are in Delaware. They're not working out of Delaware. They're just incorporated in Delaware, because Delaware has very favorable laws around that. But as far as like for me personally, Tyler, my first few deals versus today, my first few deals were smaller deals. Again, this is service versus product. My first few deals were smaller deals, but what I will say is, I feel like I didn't take a lot of risk. So small detail that I should pin on. So I started my business in 2016. My business was a consulting business exclusively. I educate my clients, I assess my clients, all these things. And so I had like errors and omission statements in my contract. Like I can't find all the things, and there's no way I can secure you 100%. We all know that as cyber professionals. So if I come in and do an enterprise risk assessment and say, you look good, and then the next day you get ransomware, you're not going to sue me. So like, I had very, very squishy get out of jail type clauses in my contracts, and explained to my clients why I had those clauses there. And then as far as risk on financial side, I had a business checking account, and all the money went directly into the business checking account. Now, I had a very fortunate situation where I had a full-time job, and then the business was on the side. So I had an income that could facilitate my family needs, my personal responsibilities, all those things. So like I would just leave the money in the bank account. And then when I got, enough in there and had the time, I went and got a CPA and said, okay, here's the current state. Like, here's all this money. What do I do now? So I wasn't like dipping in and like, ooh, I'm going to buy myself the iPhone 15, or like, oh, daddy needs a new Ferrari, or but by the way, we're not buying Ferraris on what the money I was making early. So I'm or now, frankly. So like daddy needs a new Ford Fiesta, like with a 5 on the floor. Okay. So anyways, one other question came in, Ryan, that I wanted to get with. Lawi committee asked earlier, this is a two-parter. How can one start a cybersecurity foundation with ease if your aim is not to be a profit-based business? So I guess the question is, Ryan, and I don't have any experience with this. I don't know if you do. Do you know if it's easier to start a nonprofit business and handle all that? Actually, I did start a nonprofit. Never mind. I have done that. So go ahead and...
Well, let me ask you the question. Jerry, you started a nonprofit. What do you think?
Right. So, okay. So it was very easy, and I'll explain why, Lawi. So Simply CyberCon, the conference that we ran last November and will continue to run for years, is a nonprofit. So it did generate revenue, but there's a company called HackBank, and it's actually a nonprofit that's already established that allows organizations like Simply CyberCon that doesn't want to go through all the paperwork and trouble and taxes and reporting and all that to hook to them and become part of them as a nonprofit. So they take a portion of any revenue that's collected. They set up the bank account. They give you like a credit card number that you can use. And basically you outsource the entire nonprofit component. So you can go off and do your nonprofit mission without having to worry about any of the corporate infrastructure stuff. So that's pretty much a hack. But, Ryan, if you got any experience, would love it.
No, I think that's it. Setting up the business is largely the same. You just have to be a qualifier that it's not for profit, and you have to prove it. Running the business is different. They're just different incentive structures for the business, quite frankly. And that has a whole host of implications. So I think ease of setting up the business, it's largely the same. Keeping it in business is where the hard part comes in.
Yeah, absolutely.
Yeah.
All right. So I just want to say we've got about 6 minutes. Ryan, I think you have a meeting directly after this. Is that accurate?
I do. Yeah.
All right. So we're gonna keep it tight. I want to get to everyone's questions though. So if we can, let's ask these a little bit more rapid fire. And thanks for everybody firing these questions out. Deidre Michelle Thomas, over on LinkedIn wants to know what marketing channels were profitable during the beginning stage. Were you using all organic marketing, or did you pay advertising as well?
Yeah, great question. So there's like the simple answer that I would say is like, we all know how the sales goes in the first couple months, right? It's friends, family, and then people you are not connected with. So however you want to market quickly to the people that you're not connected with early on, kind of throws a grappling hook, so to speak, out into that market and pulls it closer to you. So whatever channel that is, that's, wherever your purview is, I would say, look out a little bit and just create a couple things and start talking to them through your network to then pull that forward. And if you've got the capital and want to spend the expense, then, hire a marketing team.
Yeah. Okay. So 100%, I would say, paid versus organic marketing. Again, this is like the perfect episode, Ryan, because our businesses are so different from like size and structure and everything that it really is giving kind of diverse perspectives. So, I never really did marketing. I was more of a word of mouth. So like, I do good work and then I hope they tell other people. I did find the consulting space to be a challenge. I still do consulting, but it's more when people reach out to me. And I'm not really pushing it. As far as organic versus paid, one thing I will say is that, to Ryan's point, like in order to penetrate markets, to move faster, that's why you'd pay. Time is incredibly valuable and you can penetrate other markets over time. But if you want to take a shortcut, that's what paid advertising is. And if you want to do it well, you really either need to like do your research or pay someone. Now, Ryan said, get a marketing firm. That's a little rich for my blood. So, I mean, obviously Ryan's over here drinking out of glass. Gold, not cauldrons, gold goblets. And I'm drinking out of a carpenter's mug. But what I would say is you can get marketing help. ChatGPT can go a long way. There's a ton of information on YouTube on how to do, organic marketing, SEO, stuff like that. So again, it really turns into what's your time worth, because you can trade money for time by having, paid and penetration and all that. But organic is, you definitely want to be targeting the right people, which you might not be able to do with paid marketing. They might just spray it everywhere and then they're just taking your money. So you got to be careful. Deidre Michelle wants to know, what pricing did you guys start out charging SMB customers for MSSP services? And did you start with a front end and back end product? Final question of the day, Ryan.
Yeah, pricing is the hard part, right? This is it. This is what it boils down to. I kind of fall back on my economic roots and be like, pricing is the point where supply and demand meet, right? And this is all the elasticity of pricing. I know that's an academic answer for a very great question, but the reality is, see what the market's pricing, what the market is doing, right? How much is somebody willing to pay for it? And then look at your costs, understand your margins between those two. And then from a small, medium business side for an MSSP, I would say, determine what the long-term value of that contract is with the small, because small medium businesses become big businesses, and consider that. And then what you focus in there is like, all right, what's the delta between those two, also known as a discount? Like, how much less can I charge to get their business, right? Because I have a better product, vis-a-vis the other ones, and I'm willing to stick. That is the sweet spot. What the actual price is, that's going to be determined between, your product and the customer.
Absolutely. 100%. It really is tricky. I can tell you from my experience, I have been in a meeting and I said, it's going to cost $10,000. And they're like, okay, let's do that. And I'm like, oh, all right. So then the next meeting I'm in with a different client, similar product, I'm like, it's $15,000. And they're like, okay, all right, let's go. And I'm like, the next meeting I was in, I said, hey, it's going to be $30,000. They're like, are you crazy? No way. And I'm like, all right. So like, you're angling in, but you are going to have some of those tough conversations where they're laughing at your. I literally had one client. This is a totally different engagement. One client go, when I said the price, they're like, are you serious? Wow, I thought it was going to be so much more. This is great. Let's go. And I'm like, oh, Jesus.
Yeah.
So you gotta, I don't know. Don't undervalue yourself, right? People are going to want to negotiate. So come in a little bit over the top.
100%. And one takeaway I would leave everybody with is this. This is the bottom line idea about where pricing is. How much is something worth? It's what somebody will pay for. This is the auction side, right? How much was that item that got auctioned worth? Well, it was worth what the person actually paid for, auction to the top level. It's not worth what that second person, right, offered. So think about that from a pricing standpoint, right? There's a lot that goes into pricing, and it's not easy, but there are some philosophies that can help. All
right, thank you. Sage advice from Ryan Leirvik, guys. It's 2:00. we're right at time. I want to thank all of you. This has been an amazing conversation. Grab that swipe sheet. I've dropped another link in chat. Ryan and I put this together. And it's basically a blueprint on things that you should be thinking about so you don't get hit with a gotcha if you decide to start up your own business. Thanks again to ACI Learning for their continued sponsorship and support of the channel. For Ryan Leirvik, I'm Gerald Auger. Thanks so much, everybody. And until next time, stay secure.
Thanks, everybody.
From that amazing interview, be sure to check the entire back catalog of CyberStarters interviews for more tips on launching and the effective business operations for cybersecurity entrepreneurs. You won't want to miss our next episode, I guarantee it. Join the Simply Cyber Discord server at simplycyber.io/discord to chat with the larger community and be made aware when we go live. We want all your questions answered. Until next time, I'm Jerry for CyberStarters. Stay secure.